Constructing your life is about much more than just building a bank account. Each week, join real estate entrepreneur and mindset coach Austin Linney as he interviews guests who are constructing their dream lives and impacting the world around them on a daily basis. If you're an entrepreneur or wanting to start a business, or you just want to hear motivating stories of how others have overcome the odds, you are in the right place. And now for your host, Austin Linney.
Guys, welcome back to Construct Your Life podcast. This is Austin Linney here, coming from the new RV. You can't see it behind me, but we got the our new RV last week. This is new headquarters, taking it on the road in a couple weeks. So I'm excited to get back out there, but I'm so fired up for this. You know, guys, before I even introduce this man, if you're not in other people's DMs learning about business, I don't really know what you're doing in life. I really don't. And he has taught me so much through DMs and so much different things. We'll just call him Mr. 7A Loan. Is that what you call it?
Yeah, sure. I go by at SBA _ Matthias on Twitter, but yeah, Mr. 7A Loan works too. So
I love it. So look, before we even, I can't go there yet because I want to hear about how you got here. So, start your story or you want to, and we'll go from there.
Yeah, for sure, Austin. Well, thanks for having me on your podcast. This is an honor. I think we connected about a month and a half ago or so on Twitter, if I remember correctly.
About 3 weeks ago, maybe a month.
Yeah, so something around there. So I kind of walked through my story. So graduated from college, went to UW Madison, kind of upper Midwest, studied economics there, got my start in the SBA lending space shortly after graduation, was working from the loan office for a bank called First Bank Financial Center, now Bank 59. Guy that was about like 5-6 years older than me. Kept being his conduit with compliance, doing some loan packaging, credit, was there for about 3.5-ish years, then moved on to a bank called Byline Bank, a top 5 SBA lender based out of Chicago, was there in a middle office capacity, kind of quarterbacking the process from deal approval through closing, interfacing directly with the clients, business brokers, attorneys, kind of everyone of that nature, and just kind of quarterbacking the process from approval to closing. From Byline, I went to Live Oak Bank working remotely from Madison. So it was just me, the bank space out of Wilmington, North Carolina. Was there for about half a year working in both their search fund division with Heather Andreessen, Lisa Forrest, pretty prolific people in the space. And I moved over to their general SBA lending division. I decided to move back to Byline Bank for a couple of reasons that I'll just keep out of this podcast because it's not relevant. Was there for about 6 months, then moved from there to a bank called First Business Bank based in Madison, and was working from home for a local bank. And essentially, I got introduced to SMB Twitter, where we connected, and really saw an opportunity in SMB Twitter to help the people on the platform with getting the best lending for their acquisition. So I got introduced to SMB Twitter from an attorney named Scott Oliver. I'd worked with at Byline before. And Scott messaged me the day I joined my last bank. He's like, "Hey, Matthias, there's this community on Twitter of all these entrepreneurs looking to buy small to medium-sized businesses. You should join it, put content out there to help your bank." I kind of bopped heads with my compliance department a little bit for being overly active on social media, and kind of got my hand slapped, metaphorically speaking, and decided kind of as a byproduct to go out on my own and take a chance on myself to be an entrepreneur and help all the people on SMB Twitter with finding the best lending for their acquisition. So basically, Austin, and anyone kept listening to this podcast, you have all these different lenders out there that do SBA financing. Each of them has their own fundamentally different credit box, from more conservative to more aggressive, some kind of in the middle of the road. each of them has a different criteria as far as debt service coverage. So you take net operating income plus add backs to get to adjusted EBITDA. You divide that by bank loan payments, seller financing, you get to DSCR. So each of them has a different spot they want to see for that. Industries they want to lend in, ones they want to stay away from with a 10-foot pole, and then the background of the people that they want to lend to as well, and things like the maximum goodwill size that they want to do. So essentially what I do is I kind of describe myself as a jungle guide to people that are doing these business acquisitions to help get their deal in front of the lenders that are the most likely to finance it with the best debt terms, and help them navigate from start to finish and prepare for things that will come up during closing early on. So things like getting a life insurance policy in place or working on a lease assignment, lease assumption. There's a document called a landlord agreement, which needs to get signed eventually to give the bank permission to access the business premises if the deal goes into default. So things like that, I can help prepare the client in the front end to essentially fuel the process to go faster than it otherwise normally would. The best part of it for clients I work with is the model. The way it works is banks pay people like myself directly, separate from the loan itself. And it's typically around 1% of the loan amount. That fee does not come from the loan. It comes from the bank's own separate pot of money. So there's no cost to the client to work with me compared to going directly to the bank. So I know I've talked a lot here, so I'll let you jump in. Listen.
Well, no, it's interesting. So back in the day when I was, I have a photographic memory, but like it's photographic memory on like steroids, where like I can remember this conversation like 6 months from now and tell you what we talked about. Like it's weird, all right? But what I used to do at work, and this is your analogy why it makes so much sense, is I used to memorize what everybody did at work. Like who went to church, who had softball on Tuesdays, who was in a band. So like 60 people, I would know what all they did. So if I needed to ask off for work, I would just go right to that one person. I wouldn't ask 10 people. I'd go right to that one person. And you're essentially doing that for them. There's a million banks that are going to sell you on, we can do this and we can do that. And a lot of times you don't find out till you get down to closing that it's not as cute as they make it seem. You know, you are in essence kind of acting as, you know, for lack of a better word, a business broker, a shepherding of people. You're qualifying them ahead of time, which is going to streamline the confidence that the borrower to buy a business is going to have in the deal actually getting closed, which is the hardest part.
Yeah, kind of like a Sherpa or a shepherd. What you pick the word? Yeah,
yeah,
it's definitely good analogy.
And so a lot of that stuff you covered, especially because most of my crowds in real estate were transitioning to more of some business stuff, is kind of foreign to them. So let's start back from the beginning. A 7A SBA loan is what?
Yeah, so SBA 7A loan, you can really use it for anything. So from buying a business, you can get one for working capital. You could get one for constructing a building to host your business, inventory, furniture, fixtures, and equipment. You could get one for debt refinance. It's basically kind of the general SBA product that you can get for essentially any type of financing up to $5 million that does not involve marijuana, gambling, or prostitution. So,
and what's the typical leverage? What a down payment do you have to bring to the table?
Yeah, so the minimum requirement is 10%. Some banks want to see more. Some banks want to see. Some banks are fine with 10%. And one thing I'll kind of add in there is I've memorialized a little bit and hit the nail on the head in SMB Twitter, is one thing you can do is half of that 10% can come from a seller note if it's on full standby, meaning no payments for the full duration of the SBA loan. So a pretty common structure I see, Austin, is when you're doing a business acquisition, the bank will do about 80% leverage on the total use of funds. So you have the purchase price of the business plus transaction expenses. So like your attorney fee, your quality of earnings reports, like financial due diligence, the bank closing costs, the SBA guarantee fee, which is the fee for doing the SBA loan, the bank packaging fee, which is typically like $2,500, and then the bank closing costs. You take that and you sum that. Most of these banks are lending about 80% of that total. Then they want to see the seller do a seller note for 10% of that. Typically they like to see those seller notes on a 10-year amortization. Typically you can have a balloon payment at the end of year 3, at which time that all comes due and payable, and you have to take that out. Then that last 10% you can either do as cash from you as the buyer plus your investor group, or you can split that down the middle and have half of it be cash and half of it be a seller note on no payments for the full term of the loan.
Well, I think what's interesting, right, and we're going to continue to dive deeper into this, but everybody assumes that buying a business, right, is this very expensive thing, and don't get me wrong, it's pricey, but there's people out there buying $3 million apartment complexes, and it's not generating the amount of cash flow that a business can be. So, in essence, what you're saying is if you're buying a $1.5 million revenue business, you could typically get in for $150K to almost $200K. And be good, maybe less, depending on the way you structure it. And so I guess what I want to highlight here is you've worked with a lot of clients, you worked at banks. What is the background of most of the people that are buying businesses? Do they come from this world? Is it something new? Do they come from a W-2? Like, what are you seeing on scale of most of those people?
Yeah, great question, Austin. Honestly, it's all across the board. So I've worked with people that have come from like the investment banking, private equity, finance space. Worked with a guy that was kind of just like a general consultant of sorts. And then lots of these people that I'm working with now, like they don't have a business background, frankly. Like they might be working in tech, really all different walks of life. So essentially, when you're approaching the bank for your financing, the question is, what is your value add to the business that you're acquiring? So, right, you have the business where it's operating at status quo. You as the buyer are the exogenous variable coming into the equation. And so the question is, how are things going to react to that? So you need to articulate as a buyer why your background is value added to the business. So maybe you're bringing tech skills, a kind of professionalized technology, finance skills, operational skills, things of that nature. But back to your question, kind of all different walks of life.
Yeah, it's so great. And that's what I'm trying to highlight to people is that one of the reasons that I love going to events is, don't get me wrong, you can great knowledge for them. But what I'm asking my clients and my friends to do is when you go there and the guy that has 3 businesses or 1,000 apartment complexes, like he's no different than you. And it's not until you get around them in person that you understand that, right? And I think, one of my big frustrations with just business and lending and everything like that is the ambiguity around it, right? People, they're telling me about what can't happen, but they've never actually been through the process. And it's not until you go through the process do you realize, like, we're raising private money on our first purchase. This process is 90 miles different than if we were working with you on the SP lender. We don't have a lot of regulations. We're basically getting money from a friend who raises money for a living. So we don't have to go through all the hoops. We still had to be vetted. They still have to know what we came. We still had to present ourselves on a Zoom. But it's not a 3 months, our deal with the bank and this paperwork and that paperwork. And,
right.
But people are already out of it. They haven't even decided before they even stepped in the arena.
Yeah, no, I mean, there's definitely red tape and lots involved with doing the SBA loan. But in all honesty, Austin, the banks that don't do a good job at it give it a bad rap and make it seem like it's harder than it needs to be. When the process goes well and you're working with a bank that does that does lots of these, it should feel like a conventional loan just with extra paperwork. Like I've had deals where when you set it up correctly and you come to the bank with a well built out data room, it can go as fast as 2 weeks in underwriting, and you could be closed in like 6 weeks. Now, that's very much more of the exception than the norm. It's typical timelines anywhere from 10 weeks, so up to 2 weeks to get term sheets, 4 weeks in underwriting, and 4 weeks post-approval and closing. But it can go as long as 90 days, or if you have a very complex deal with lots of moving parts, unfortunately, it can take longer as well.
So I want to present something that we're in the process of doing right now. It was presented to us. We didn't dig into it because we were worried about making the offer first. But we're in the process of trying to buy in a very expensive business, way over what SBA could lend. But one of the CFOs we're working with off of Twitter, thank God for Twitter, is telling us that you can do kind of a mix of an SBA and private money loan. Is that something that you've seen as well too?
So I haven't personally seen that before. So like essentially you'd have two different tranches of debt. It'd be the SBA plus the private money. I've seen Austin what's called a pari passu loan, where you have the SBA up to 5 million, and then some banks will do conventional on top. So like up to 2 million or up to 4 million. As long as that private money lender acknowledges that they're a junior creditor. Yeah, second to the bank. There might need to be some type of intercreditor thing if they're trying to take liens on the same collateral. Probably not. I think it's possible. I've just never done one before. So.
And what do you think are kind of the quintessential, let's say, top 1 or 2 or 3 items that people have, the myths they have wrong about SBA loans and kind of things that you've seen over the years that gets a bad name?
Yeah, so I mean, one thing is like the timeline. So like I've worked with some people where they're working with banks that aren't top SBA lenders, and like it took 6 months and they were kind of beating their head against a rock. So like the timeline is one. Sometimes it could be the down payment. So there are conventional banks that are trying to essentially put a bow and tie on their deals to de-risk it. So they're getting the SBA guarantee fee, but structuring it the same way that you would a conventional loan. So they're requiring more down. And then that kind of percolates back where people think that you have to do more down on an SBA loan. I'd say the other thing, or just kind of misconception, which happens a lot, kind of to your point earlier, is lots of people think that the down payment needs to just come from them and that you can't bring on investors. And that's actually not the case. And what I'm seeing a lot now, and I actually had a deal closed recently with the structure, is it was a guy that was like 4 years out of college that worked in the investment banking, private equity space, bought a business where the total use of funds, so purchase price plus everything else, was $3.3 million. So 10% of that is $330,000. He wrote a check for $45K, and the rest came from family and friends. So lots of banks might not necessarily be comfortable with that structure, but the ones that I'm working with that do SBA lending well for M&A and understand that it's the cash flow that actually pays back these loans, and the skin in the game is the PG plus a meaningful amount of cash from the buyer. Those are the banks that really excel in the space that are giving the space a good name. So.
And I could go through the 30 different things of why we're moving to the business. I could talk about my career, right? And why we're here. But I tell you what, the number one thing I fell in love with is the creativity in the deal.
Yep.
I mean, it's all on the table. I find so much joy, and I like complex problems and I like big solutions, but I just really enjoy the aspects of the creativity of the way you can structure a deal with the real estate, with the down payment, with private money, with SBA. I just think it's so interesting. It's really like, that's what I think some people have problems with too, because there's not one size fits all in this space.
Yeah, and that's like one thing too. So with these SBA loans, there are the confines that you're up against. So like if it's a deal with no real estate, the term is going to be 10 years, the amortization will be 10 years. Then the down payment's always going to be a minimum of 10%. But as far as like how you splice and dice that piece of it, there's so many different ways that you can do it with like common equity, preferred equity, things of that nature, where when you're dealing with a bank that has a higher comfort level and they know what they're doing, you can really kind of explore some different avenues that make sense for all parties.
And something I learned in the real estate space, and this is why having somebody like you is so important. What we used to do is we used to do an outreach program where we would call banks or we would network and we would find out which banks got a directive from the owner that they wanted to be moved into this space or this city or this area. Do you get what I'm saying? Like we would say, oh, we'll look at anything from 5 million to 10 million in a 100-mile radius from this bank. We have a directive that we have to grow. Is that somewhat you're keeping your ear to the ground of what banks are lending in what sector and kind of what they're hot on right now? Is that what you're helping your clients do, is kind of saying, maybe they're talking to you before their search, so they find a business that's kind of already in the home run spot?
Yeah, so it's more of so the banks I'm working with, Austin, they lend nationally, so that piece of it isn't really as much of a factor. Mm-hmm. But it's more like what debt service coverage ratios are banks wanting to see for historical, year-to-date, TTM, things like that. What are they comfortable with lending up to for goodwill? So like the essentially loan amount minus the value of the hard assets. How many turns of EBITDA are they comfortable with lending up to? What are industries that they're doing lots of deals in? So maybe like HVAC, plumbing, electrical. Which industries are they trying to stay away from? Are they fine with lending on year-to-date performance versus like maybe 2019 and 2020? The business was in growth mode and got hit with a bad COVID time period. So trying to figure that out so that once the client has a deal, I know which banks it's going to be a good fit for.
Wonderful. And I want to switch gears for a minute because you took a chance on yourself. Most people that are listening to my podcast, they want to leave their job or they're in the middle of doing that currently. You had a job. You seem to always have had a job because, you were sought after. How was that transition for you? Were you scared? Has it been a wild ride? You kind of, when you look back at it now, as you said today, like, I'm sure you feel like you made the right decision, but in the moment, it was probably pretty scary.
Yeah, great question. So the inside scoop of how it all went down. So I was on the island of Crete in Greece. So I put my notice in. And so I put my notice in the morning of that day. So it would have been a different time zone here in the US. But that day, essentially, I put my notice in, kept shut off my phone, and then went on like a day trip excursion with my wife. But right after I got back, it was just kind of pounding the pavement, like reaching out via DMs to different people. Hey, I'm doing this. I heard you're looking at a deal. Would love to help, blah, blah, blah. And then in the evenings after my wife was asleep, hopping on Zoom calls with different people. So working until like 1, 2, 3 in the morning. And then the whole flight back from Greece, I was just pounding the pavement, working. I think maybe for like an hour I slept, but that was kind of it. And then the couple months after that was really just like outreach, hitting the pavement, getting my name out there. But things have been going really well and on track this year. I'll do significantly better by the end of the year had I stayed at my last job. And next year will be even better. So I'm glad I did it.
And what was easier than you thought before you started Alfondra?
So the easier part has been the value proposition and getting that out there so that it makes sense to people, because lots of people in the SBA or lots of people in the SMB community aren't really super familiar with the loan broker model in the SMB acquisition space. They've heard of it before, like in the mortgage space, but since when you aren't familiar with something, you need to do additional diligence and kind of get comfortable with it so that it makes sense and there's like nothing weird about it. So that part was easier. The thing I've found that's the most difficult, to be honest with you, is lots of these searchers, there are certain banks where they have a big name in the space and they're kind of like at the front of the market. So if you go on Google and you type in top SBA lenders, you're going to have banks like Live Oak and Byline that will pop up, rightfully so, because they're paying to go up the algorithm. But the thing is, if you're a searcher and say you have a structure that you want to do that doesn't work with one of these banks, unfortunately, what's going to end up happening is you're going to call or email the lender at that bank and say, hey, I want to do this deal with the 5% standby, and the debt service coverage last year, the year before wasn't there, but this year it will be, or based on the year to date, it's there and it's growing up. Next year is going to be really good. These banks might pass on that structure, at which point you think you have no option. So one of the things I'm really trying to educate people about on Twitter is that just because one bank, like one that you've talked to or one that has a robust presence in the space, is saying you can't do the deal, doesn't mean that there's another option that isn't out there. So,
no, 100%. And I think what's interesting, right, is I look at your business and you're explaining it more. Like, you don't own anything. You own a process. You own, helping people. And I think it's in essence, it's an amazing arbitrage vehicle for the searcher who's looking for a business, because now you have another person in your corner as an advocate to see the deal go through, but you're not the one paying it. So I really think it's the business model on its head is very genius for multiple people. There's a lot of wins across the board for the bank, for yourself, for the searcher. As you help people, fund more businesses, and you see the inside of all these businesses, and you're on Twitter, do you see yourself owning small businesses one day?
Yeah, so not in the operational capacity, like sleeves up, I'm the one turning the wrench. But I've definitely thought about doing like direct equity investments into some of these SMBs. That's definitely on the table, and something I've given serious thought to.
And I think one of the things that excites me about you is that you're very comfortable in a space that is of your skills, and you leave everything else behind. I think that's like a superpower, because I think a lot of people, I was just having a client call a minute ago, and I said, I would be looking about things I shouldn't be doing, not the things I should be doing. And it's like, cause like, it's all available. There's YouTube, there's Twitter, there's, there's books, there's everything. But when you find kind of the things that you do great, and you just kind of do those over and over again, you can kind of really create something magical.
Yeah, no, I definitely agree. I mean, I tell people currently, at least, like, I only do SBA. I've tried to give some advice on like non-SBA stuff, but I'm honest with people, like, this is what I know, this is what I don't know. I could try to take your deal on, but it might not end well, because I just don't know that space currently. So
what's the I'm going to steal Alex Bridgman's quote, or little last question on his podcast, my favorite podcast, real quick. But like, you've seen a lot of businesses, what do you consider to be one of the better businesses that you've seen? Is it sector dependent, or is it just merely by happenstance with with the location and stuff? Because I think that's the question I get asked the most, is like, where do I even begin looking, right? That's like the number one question I get asked.
Yeah, so I would say kind of less industry specific, but more general attributes. I like businesses where there's like a contract aspect to them. So you have recurring revenue, B2B kind of more than B2C, ones that are kind of more CapEx light. So you don't have like lots of moving vehicles and things that need to get replaced, which ends up leading to like lots of insurance. Then you have like repairs expenses on the balance sheet, stuff like that. Or like just recession resistant industries, like the trades, like HVAC, residential or commercial, ones like that, where they're always going to be around. Ones that I try to coach people away from are like retail, or anything that like Amazon or a similar company might move into and disrupt, and then there goes your business. So
yeah, 100%. if people want to find out about you, they want to schedule a meeting, they want to learn more about what you do, how would they do that?
Yeah, so the best way is just to shoot me an email. First name dot last name at pioneercapitaladvisory.com, which is Matthias Smith SMITH at Pioneer, spelled Pioneer CAPITALADVISORY
Well, guys, if you're not on Twitter, I just got back on about 3 weeks ago. I never really was on in the first place. But if you're not on Twitter and you I mean, dude, this is how important it is to me. I bookmarked about 50 threads twice. I've had a VA go through and print them out. And I think in those 2 pieces of paper, you basically have a 4-year degree times 10 and just learning from that. And I think, people need to get on, they need to connect with you. You have such a positive presence on there, teaching so much. So thank you for the time that you put in there. And please reach out to him if you have any questions. I'm really excited about getting this episode out there because it's talking about stuff that we haven't typically talked about in this podcast. So if you got some value from this, send it to a friend, send it with somebody, share it, and we'll see you next time, guys.
Thanks, Austin.
You got it.
Thank you for listening to Construct Your Life with Austin Linney. If you enjoyed this episode, be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, take this opportunity to start constructing your life by taking immediate action on what you learned. For show notes, resources, and more information on one-on-one coaching with Austin, visit constructyourlifepodcast.com.